Welcome to the 40 Finance channel, everybody. Today we're talking about stock buybacks and which buybacks are going to have the most impact for you as an investor with an eye here on 2025. Now listen, last year was an amazing year in the stock market with really explosive growth on the bottom line, particularly for the big players, the Mag 7s, etc. But that growth percentage is not going to be the same this year. So one thing that I expect to happen, particularly with companies that have a ton of cash flow, is you will see an increase in stock buybacks because that is one way, the sort of tricky math of expanding your EPS by lowering the number of shares that are out there. All right, now before we jump in, we'll be using a lot of data points from Seeking Alpha Premium today. If you're interested in learning more about this platform and potentially supporting my channel, check out the link in the description. It gets you a 7-day free trial as well as $30 or so off your annual subscription. All right, so we're going to start here with this article that highlights the S&P 500 companies that were the biggest spenders on buybacks in Q3 of 2024. Now, if you're new to sort of calculating buybacks, it's a little bit of a tricky world because you don't actually get the information of who bought back what until the rearview mirror, until the next report comes out. Now, you will get companies who will announce buybacks for a fiscal year. So they might say, hey, we were approved for $10 million in buybacks. But keep in mind that $10 billion is likely an annual budget, so to speak. You don't know how much they're going to spend per quarter, and you don't always know for sure if they're going to spend all the money. So if things change in the stock market, or if they think that their stock prices went up, it's not as good of a deal anymore, they may not spend any of that money. So it's not the kind of thing you can track live. You just have to sort of go back and do an assessment like this to see who made, the best pick per dollar, and then roll that information into whatever you have for 2025. Now, for this chart, which is, again, tracking back to Q3 of 24, you have Apple, Alphabet, NVIDIA, Meta, JP Morgan, Visa, Exxon, Chevron, Microsoft, and Bank of America. That's about as far as we're going to get for this particular exercise. And what I'm going to attempt to do here is put this data into more or less like an impact score, right? So you see the gaudy number on Apple. Q2 into Q3 combined, they spent over $50 billion on share buybacks. That's obviously a huge number. You got Alphabet here coming in next at about $30 billion. But keep in mind with Apple and even Alphabet, the number of outstanding shares on the market is spectacularly higher than some of these other names down here. So what we're going to do is take a look at how the shares have decreased as a percentage and apply that on a per share basis to an EPS score, and that'll kind of give you like the impact. Now we'll kick things off here with Apple. Apple makes things a little bit harder than some of these others because their fiscal year basically runs on an August through September fiscal calendar. So we're just going to take the TTM data, the trailing 12 months. In September of 2024, they had 15,408 shares. They are now down to 15,301 shares. And their trailing 12 months EPS is $6.28. Now, I'll stack all this data so we can compare it here in a second, but I want to let you know for Apple, this transition from 15.4 billion to 15.3 billion shares outstanding, that is 0.69%. So they purchased 0.69% of their outstanding shares. All right, next up we have Alphabet. Alphabet runs a traditional fiscal calendar, so it makes it a little bit easier. They went from 12.722 billion shares down to 12.447. So this discrepancy or this change comes out to be 2.16%. So right off the bat, you see where this is going. Alphabet spent considerably less than Apple, but they were able to knock off 2% or so of their shares outstanding compared to Apple at 0.69%. All right, next up we have NVIDIA. And NVIDIA, with all their stock splits recently, they actually have the most shares outstanding across anyone else that we're talking about today. So they started off Jan of 24 with 24,940,000,000 shares outstanding, and now they've got 24,862,000,000, and that works out to be 0.31% of shares outstanding that they have purchased in the last 12 months. Next, we've got Meta, 2.629 billion shares outstanding back in December of 23. They now stand at 2.614 billion, so they have purchased 0.57% back of their original shares outstanding. I'm not sure I've covered this on all the stocks, but just note that Meta's EPS over the last 12 months is $23.86. You don't have to memorize that. I'll stack it all up on the screen here at the end. All right, how about Exxon? And Exxon is very interesting. So with Exxon, if you go to December of 23, they had 4.052 billion shares outstanding, and they were supposed to be one of the leaders in spending and share buybacks. But at the end of the day, December of 2024, they actually went up in shares, 4.298 billion shares. So they went the wrong way on their share buyback program, and they actually added 6% more shares from the end of fiscal year 23 to the end of fiscal year 2024. And that, of course, will dilute this EPS number the wrong way, $7.84. All right, let's talk about Visa. Visa has the same fiscal calendar as Apple, so we'll just take the TTM data, 2.029 billion shares. Now they're down to 2.014 billion shares. And for Visa, let me check that. That is a 0.74% difference on an EPS that's come in last 12 months at $9.92. All right, JP Morgan is next. 2.943 billion shares at the end of the 23 fiscal year. They finished this past year 2.879 billion shares, and that was a buyback rate of about 2.17%. So definitely one of the leaders there in percentage of shares bought back. You also have a strong EPS of 1975. All right, this last one I'm going to throw in was actually not on the chart of big spenders, but it is PayPal, and I thought that this was pretty interesting. So PayPal had 1.107 billion shares at the end of 23, and they finished this past year 1.039 billion shares. That is actually a decrease of 6%. They bought back 6% of their shares. Their EPS is far from the highest of everybody else. It's coming in just under $4. But I'm going to throw PayPal on here as well as Exxon just to have another barometer as we look at the final data here. All right, so here's what I've got on my sort of made-up formula, if you will, of value of buybacks. Who's delivering the most value to shareholders per their buyback? I'll walk you through this just as more or less an eyeball metric, okay? But it was kind of a fun exercise to do. So with Apple, all of these are going to be trailing 12 months. All right, some of them have aligned with the fiscal calendar, but we just got through a healthy dose of earnings, at least for these companies, so it stacks up pretty well. Apple used to have, 12 months ago, 15.4 billion shares. They now have 15.3. We talked about the percentage of shares that have disappeared or been bought back, 0.69%. If you take 0.69% of their most recent 12-month EPS, which was $6.28, you get a value per per share of about 4 cents. And what this number means, the 4 cents to me, like on a high level, is just that, Apple added about 4 cents of EPS through all of their share buybacks over the last 12 months. So that's the formula, and we'll stack Apple up here with Google. Google delivered about 17 cents, buying back 2.16% of their shares on a trailing 12 months EPS of $8. If we look at NVIDIA bought back 0.31% of their shares, trailing 12 months EPS of $2.53. They delivered about a penny of value to shareholders through that program. Now, how about Meta? They bought back 0.57% of their shares. They have an EPS of $23.86. That's a pretty strong number. In fact, that's the highest number we have on the board EPS-wise, and that enabled them to deliver about 14 cents of value for shareholders. Next, I put PayPal in here. They were the biggest purchaser of shares, approximately 6%. Their EPS, though, was one of the lower ones at $3.99. It still works out to be about 25 cents per share of value added. Then we've got Visa. They snatched up about 0.74% of their shares, EPS of almost $10. They delivered about 7 cents of value. JP Morgan Chase, they bought back about 2.17% of their shares. Their EPS is very strong as well, $19.75, and that enabled them to actually win this sort of value contest at 43 cents. So JP Morgan Chase delivered more EPS than even PayPal did, even though they technically bought less as on a percentage basis than PayPal did, right? PayPal bought 6% of their shares back, JP Morgan 2%, but JP Morgan's EPS significantly higher. Then we talked about Exxon. I just put it in here, they went backwards. So I don't know how they made the list of buybacks, but it's not a stock that I know a lot of details about. So they went up about, I guess that would be 240 million shares. So they gave back 6% of their shares, or they added 6% more shares to the pool, and that's going to dilute your $7.84 EPS. So Exxon likely cost their shareholders about 48 cents in EPS, assuming all this math from Seeking Alpha is correct. All right, so that's a quick look at the top buyback spenders of the last couple quarters, at least the reports that we have set in stone. Let me know what you think of some of these stocks in the comments, and if you've heard rumors of any other big buybacks coming through that you might want to run through this formula. Before you go, don't forget to check out that special offer for Seeking Alpha down below. I hope everybody's doing well. We'll see you on the next video.